Welcome back, wealth creators, with another video that I think you guys are going to be sure to love. So today I'm going to go over our profit first accounting method. And so this is something that I offer to people who might be at the beginning of their business journey or haven't even started their business yet. Okay. And what I like to do profit first accounting for is it gives you an idea of how your money should be spent before it even comes in. So let's get into it. And the reason why it's called profit first accounting is because if you look at the top rows of each section, as you can see here, these are the sections in which your money is going to be split. So as you can see, first we have profit at 20%. This should be between 20 and 30%. And the reason why we call it profit first is because a lot of business owners don't pay themselves in their business. They spend a year, 2 years, 3 years grinding, learning, doing everything in their business, and they don't pay themselves. So the profit first accounting method is supposed to be to allocate a small percentage of your capital of your money coming in aside for yourself. Okay. And as you can see, this profit, it should be paid out quarterly, meaning every 3 months. Okay. That's why you see quarterly pay. This can also be used to give bonuses to employees who perform very well. And it can lastly be used for business additions. But you want your profit to truly go towards the owners and the people who are making the business go. The second thing you want to account for is your income tax. We all know Uncle Sam is coming no matter which country you live in, no matter what's going on, to play the game of business. Tax is that reward you earn for winning, right? And so the good thing about tax is you normally don't earn it unless you're making money. So it's not like you have to worry about it, but you should always allocate about 20% to it. If you have a taxation accountant or somebody who's doing some tax planning for you and giving you some strategies, then maybe you can have the luxury of lowering this down to 15. But I would say never, ever, ever go lower than 10, because when you start making money, this will grow, and you want to have something in the bank so you can at least make a small payment to the IRS. They will allow you to get on payment plans and catch up if you are behind, but you want to have something there so you can at least start that process. The next one is your operating expenses. This should be everything that makes your business go, and this should fall between 40 and 60% depending on how much it costs to run your business, what type of expenses you have consistently, and it's just some things most people will be paying for: your rent, your employees, your software, utilities, your travel, and even your insurance, right, to protect yourself. So operating expenses will be the biggest chunk of the money being spent, but that's because without the business we're not making any money, right? So the operating expenses to keep the business going. The next one that you have is your party fund, but I would call this the employee retention department. The employees are what make your business go. And so we know that in business, especially at the beginning, it's hard to pay your employees the correct amount, even just to be competitive, right? But what you can do to kind of offset that is make sure that your work environment is a fun environment. Know what holidays are coming up. Know what your employees want to see during Christmas. Do they want a party? Would they prefer you to have a gift sharing day? What type of things do your employees think make the business better? The next one, this would be for your nonprofit, your community, anything that you feel you want to donate from the business. And you can also make this a little bit higher, but at the beginning, I recommend separating this and having this be 5% while splitting the other 5% with emergency fund. Now, as you grow your business, you're going to make more money and be able to spend money doing more things. So eventually you'll be spending more money on insurance, maybe having a lawyer that you're paying, that's going to really safeguard you more than just having a few extra dollars will be. And so then you'll be able to move this into the donation, the community development, whatever is important to you and your business. But the whole goal is not just to split up the way that I have it split up, but to know how you want to spend your money before it comes into your business. And so this is just a nice template to give you an idea of, if you made certain money, where it would go and how you would spend that money. So I hope this profit first accounting method makes it easy for you to do that, and I look forward to building it out with you.